What's going on, everyone? Welcome back to another lesson where in this lesson we're going to be talking about pump and dumps. So if you guys have ever seen The Wolf of Wall Street, then you guys probably have a decent understanding of what pump and dumps are. They explain it pretty well in the movie, but it's basically where somebody essentially buys up a large portion of a stock and then they pitch it to a lot of other investors. They get a lot of hype around it. Oftentimes there's going to be bogus news stories about it down here. How this company, has the opportunity to make trillions of dollars and they're the next Amazon, when in reality they're a penny stock that's worth pretty much nothing. I took the liberty to do a small scan here where I got a few companies that may be pump and dumps. Now, I will say, just sitting here looking at this last one that I was looking at, this is actually probably not a pump and dump, as this is Richard Branson's Virgin Galactic. However, this is very much so what a pump and dump will look like in terms of a stock graph and how you can recognize when something may be being manipulated. And even if it's not being manipulated, if a graph looks like this, in this case, Virgin Galactic is probably not being manipulated. But even a stock case like this, I wouldn't invest in it for the same reason. And the reason for that is, for months, this stock was trading at almost nothing, $10 a share, and it was going up on average, 0.5% a day, give or take, maybe 1% on a big day. Here, over the course of 2 days, we had 1.6%. And all of a sudden we have a big shoot down, and then it shoots way up, and we're up almost 300% from its low just 2 months ago. So, this is what a pump and dump will look like oftentimes. I honestly was not able to find some really good examples, although I do have a few in mind. So in this case, this showed up on my scan here, although I will say this is definitely not a pump and dump. They just had a good earnings call, and that's why they had a big shoot up, and that's why it met the criteria of my scan. But if we look here, this is a $400 million company. That's definitely possible, especially here. If you look at these blue graphs, these are the volume charts. Every time we have an earnings call, like here and here, and here, a lot of times you will see more volume going through. But then all of a sudden, out of nowhere, no earnings call or anything, we have one of the highest volume days ever, and the stock is up almost 20% in just one day. So I'd really question what's causing that. It's probably something to do with news. In this case, Canopy, which is one of the largest weed companies, actually had a very good day. And I'm pretty sure this is a weed company as well, and it's likely that they benefited from Canopy's large day, and that's part of the reason there's more volume here. So a lot of times things can be explained, and maybe there isn't a guy like Jordan Belfort behind the scenes pumping something up and manipulating it. But even if the graph looks like a pump and dump, you probably don't want to mess with it, really for the same reasons. Just because someone is pumping it up behind the scenes doesn't mean you can't make money off of something, and it doesn't mean you can't lose money off of something. And it works the same way if someone's not really manipulating it at all, but it's shooting way up at times, and it's really unrealistic. So if we look at this last company, this is very likely a pump and dump. Here, we'll type this in. Yeah, so, this is a very good way to realize what a pump and dump is if we look down here, there's really no volume. Here and there, there'll be volume, and then all of a sudden shoots way up. This is days after earnings. All of a sudden, we have a huge volume spike, shoots up almost 100%. So I would very much say this is likely a pump and dump, and there is some manipulation going on with this, especially here. I mean, look at this. All of a sudden, huge volume spike, huge price spike by over 100%, and then the next day, it shoots right back down. So, it's not something I would invest in, just because you don't want to have a case of FOMO, which is fear of missing out, where, this company, if you're trading it intraday and it's up, let's go to the 4-hour chart. You're trading it intraday and it's up, 20% here. You don't want to be like, oh man, it could go up another 30%. It definitely can go up another 30%. But at the same time, tomorrow it could go all the way back down. So, if you invest up here because you think it's going to keep on going higher and higher, then, you just lost 40%, in one day. So that's really the main reason that you don't want to mess with pump and dumps. Here we have one of the most famous pump and dumps that I've ever heard of, really, and that is Helios and Matheson, HMNY. This has really been a big pump and dump ever since I ever started investing in the stock market. Here we are all the way back in early 2018. The company's trading at like almost nothing, and then we have a huge shoot up by 1,300%. Yet this is a week chart. By the next week, it was down almost 60%. So, you don't want to find yourself in a case of FOMO and buying up here when, this stock was literally trading at $9,000 a share. And yet today, or at least at the last trading day, it was trading at 0.00002 cents. So that represents a 99.99% loss. This is really the main reason you don't want to mess with pump and dumps. And the thing is, if you look right here at these volumes, we likely had a spike somewhere, but it's literally gone down so much in value that I can't even see the candles charts on this. So if we go back to the 180 day, back in September, all of a sudden, volume's really flat. There's no volume down here. The price isn't moving that much. All of a sudden, we have a huge shoot up in volume, and the stock goes up by over 400%. And yet, within 2 to 3 days, it goes back down over 60%. And here, and over time, it's slowly gone back down to the same price of about 0.002 cents. And then here recently, it actually shot down even lower. This, I think, was not really manipulative. I believe the company may have announced some form of bankruptcy, or their main product was MoviePass. That was kind of what put them on the map and everything. And I think they're spinning off MoviePass, or they're selling MoviePass, or something like that. And that is likely what's caused this drop right here. So, that's probably not manipulation, but, if we look here, I would almost guarantee that this is some manipulation. If we go to a year chart, this is likely well, actually, that's the same thing. Here, okay, I can't even see it. So it's pretty much impossible to even see on this chart because it's just been manipulated so bad. And there's plenty of other examples. You guys may have heard of NIO. They're kind of like the Chinese Tesla. This is certainly not a manipulation case. This company has not been manipulated. It's actually a quite large company. However, there's a huge amount of hype over it, and it shot way up at the beginning, yet, over time, it's gone way down. So, this is a company that was kind of hyped up for a little bit, and, nowadays, it's really not got a lot of value on it. Could this company be worth something one day? Certainly so. Tesla's doing quite well now, but that's just something to keep in mind, that pretty much every day there's going to be some company that's just shooting up big time, and a lot of times there's going to be some level of manipulation, and even if there isn't manipulation, you probably still don't want to mess with it, just because you're going to have a chance of you trying to get in right here because you think it's going to keep on going up, yet it flatlines and then goes way back down again. To far lower than what you were able to purchase the shares at in the first place. So whenever a stock chart looks like this, you probably don't want to mess with it. Now, if you're trading intraday, there definitely can be some potential here and there. I mean, if we go back a few days, there might have been a good day here. So, you might have seen some opportunity here when this touched the middle VWAP and you decided to purchase it and you made 3% on your money, in the course of an hour. That's not very bad at all. But in terms of swing trading, don't get caught onto the hype. And that's the exact reason that I don't really have a lot of Tesla shares right now, because I really see this as a lot of hype. And, while Tesla is a large company and there isn't any kind of manipulation going on with it, in my opinion, the stock chart still doesn't look incredibly favorable. And even though the fundamentals do, the stock chart just isn't there. It's shot up out of nowhere over the last little bit out of these two very good earnings. And, it's just not something I want to invest in, because I think it's very likely that Tesla is going to go back down to around 400 to 500, next earnings, if that doesn't work out incredibly well for them. And overall speaking, I definitely think I could get these shares at a much lower price. If I were to get into the position right now, I would consider that to be FOMO and, really just a overall mistake. So that's really what I wanted to highlight in this video. Is there's going to be companies pretty much every day that somebody's trying to tell you is going to be the next Amazon. It's pretty much always not true, and you really want to rely on yourself more so for what it is that you want to invest in, and you certainly don't want to invest into any of these penny stocks long-term speaking. Now, in the case of DGLY, if you wanted to trade this intraday, that could definitely be a great opportunity. If you were to purchase some shares in the pre-market, you could have made 50%. But in terms of long-term trading and holding this for, maybe a month, 2 months, because you think there's going to be a scenario like this again where you make 50%, it's probably not going to happen, and it's probably a pipe dream. So that's really what I wanted to highlight in this video. Is you probably want to stay away from any kind of stocks that have some level of manipulation or just very unrealistic movements. If you were to take the case of Tesla or Virgin Galactic. So overall speaking, I generally, if I'm going to be trading a stock, I'm likely going to be looking at something that I think is a overall good company and has some decent fundamentals. I might be trading Netflix tomorrow. That's a company that I think has some okay fundamentals. I'm definitely not as big of a fan of Netflix as I was in the past, but this is something I might be more inclined to trade rather than HMNY, for example, because if you're trading this, you're probably just asking to lose money. Especially even look at the intraday spread on this. It's literally 80% on individual seconds. So that's really what I wanted to highlight in this video. Is you probably want to stay away from low volume stocks like this and things that are gonna be very manipulative over time, because you're often not going to come out of that in the green. So with all that being said, I hope you guys did enjoy this lesson and you found a lot of value out of it, and I will catch you guys in the next lesson.